I'm Emily Chang at Facebook headquarters in Menlo Park, California, and this is Bloomberg Technology. Coming up in the next hour, big revenue beat for Facebook in its latest results, suggesting the scandals and controversies over the last year haven't impacted the bottom line. Plus, Tesla also reporting fourth quarter results. Earnings came in below expectations, but the company still expects to deliver more than 400,000 cars in 2019. And Alibaba reported an increase in revenue driven by growth in its China e-commerce business and the cloud. How the company shook off trade tensions with a focus on affluent young consumers. But first to our top story, and that is Facebook reporting fourth quarter revenue that beat estimates across the board, leaving the social network's bottom line unscathed by a series of privacy scandals. Facebook also gained users in North America and Europe after several flat and declining quarters. But can the company keep it up? Joining us now from New York, David Kirkpatrick, founder of Techonomy and author of The Facebook Effect, and Michael Purvez, Wheaton Chief Global Strategist. David, I got to start with you. These numbers are better than a lot of people thought they would be. What's your take?
Well, I think there's essentially two parallel stories with Facebook. The numbers are going to continue to be great because advertisers really don't have another place to go. It doesn't mean that there isn't a separate story that is still quite unattractive about their inability to really govern their systems properly. I think it's telling that just today there was yet another story of a privacy problem in the way they were handling their apps, and Apple found it unacceptable. So, it's a weird sort of yin and yang thing, but Facebook has a spectacular business, in some ways the best business that anybody's ever invented.
To give some more detail there, what happened is that Facebook had a research app that it was paying users to use, including teenagers, in exchange for their data. Apple has said that this violated the terms of service for this particular app. They've revoked Facebook's enterprise certificate, which means that Facebook can't use any of its internal iOS apps. Employees, we have heard from our sources, are panicking because they can't get any work done. I mean, Michael, the numbers look good, but this is just another dark cloud.
Right. I think as David was pointing out, this company has all sorts of dark clouds. The dark clouds don't seem like they're going to go away anytime. But the earnings that we just got sort of affirm that this cash flow machine this mousetrap is still working very well. And I think that gets to a broader discussion about the tech sector and where people want to be positioned in the markets. But I think, Facebook as a sort of microcosm of all these tail risks about consumer disengagement from these quasi-monopoly platforms, as the earnings have just been showing, you're just not really seeing these business models breaking down yet.
Now, Facebook is saying there was nothing secret about this app. It was literally called the Facebook Research app. But when I tweeted that I was going to be sitting down with Sheryl Sandberg here today, I got a lot of angry responses. I mean, people saying children, they're collecting data from children, paying children to give Facebook their data. David, do you have a sense that revenue could be a lagging indicator for public perception?
That's an interesting way to ask the question. I mean, the key question is when advertisers get annoyed and stop paying for advertising on Facebook, and that hasn't happened. But I think Facebook really does have a values problem and a judgment problem, which unfortunately was manifested again today in this story about the way they were surveying people and violating Apple's terms by doing so. And I'm afraid that we're likely to see more stories that are very unflattering to the company because, unfortunately, all the evidence is that the company has some judgment issues that pervade its culture, and that they really haven't built a culture that's sufficiently protective of people's privacy and respectful of users. And I'm sort of surprised by that, and I don't really know what to expect long term because it's really unattractive. There have been so many negative stories about how this company has handled data about their users and failed to protect it, and not to mention all the electoral governance issues, et cetera, and fake news and hate speech and genocide. And, these are bad stories. They are a giant platform that has huge impact on society, but it doesn't seem to me they really know how to manage their platform considering its scale.
Now, reading some reaction from Rich Greenfield of BTIG, who's been on the show many times and defended Facebook, he says it's hard to get people to stop using something they love. People love using these products, and the massive attacks that news outlets continue to heap on them. Despite those, consumers like these platforms, and advertisers follow eyeballs. Michael, would you agree?
Yeah, I mean, I think what Rich has been pointing out, what David is pointing out, is that advertisers may not have another place to go, and right now the consumers are not really finding another place to go. That could obviously change. I think one of the questions that David is raising is the values question, and I guess the question is what happens to these incredibly compelling 40% net income margins if their values change? Is there an economic trade-off for that? And are we going to start seeing some of the if some of the revenue composition is unseemly going forwards, and they are going to push towards cleaning that up? Is that the highest margin revenue that they've been getting? I think that's one of the questions that analysts have to figure out prospectively.
Right. Facebook is currently being investigated by the FTC. We've reported they could expect a record fine there. The Irish Data Protection Authority also investigating. But, David, I wonder if even regulation will have any impact on the numbers.
Well, regulation could have serious impact on the numbers. For example, I was just in Davos and in Europe and in Asia, and I talked to some government people. There are people who would love to split up these products, Instagram, WhatsApp, Facebook, and Facebook Messenger, possibly as a punitive thing. I'm not saying that's going to happen, but it will be pushed by some government officials in some countries, possibly even the United States. So if that were to happen, that would definitely be a negative for the stock, at least in the short term. I mean, who knows what it would mean? It's such a totally unexpected and unknown landscape. But, to go to what Michael said before, margins are coming down as they are trying to govern the system more effectively. They're spending more and more money to try to remediate some of the oversight that they allowed to occur before. But, I absolutely believe we will never again see the margins we saw a year and a half ago.
Right. They have been investing heavily, and a lot of that investment has gone towards hiring tens of thousands of people to tackle some of these security issues, fake news issues. Michael, when you look ahead, where do you see the new growth coming from? Do you see budgets moving away from Facebook to Instagram to other products, or are they all just going to keep going up?
Look, I want to clarify that I'm a macro strategist. I look at the sector. I'm not a Facebook analyst, so I want to make sure the viewers understand that there. And I don't really have a view on where the prospective growth is coming from. But I would certainly say, if I may just weave into this discussion for a second, which is that if you look at the relative volatility for the FANG universe, for the tech sector, that had been at a real premium really since Cambridge Analytica. And that volatility premium tends to spike into earnings seasons. It did in July, it did in October. It did not do that this time. And I think this concept of the markets adjusting to these risks, that's been a sort of a 9-month process that we're kind of largely through. Obviously, valuation is a lot more compelling now than it was, say last March or so.
All right. Well, Facebook's earnings call is underway. CEO Mark Zuckerberg is speaking. We're going to bring you all the developments as they roll in. David Kirkpatrick of Techonomy, Michael Purves of Whedon. As always, thank you both for joining us. And stick with us tonight. I'll be sitting down with Facebook COO Sheryl Sandberg to talk about all of this coming up. Also, Tesla's fourth quarter numbers are in, and it's a miss for EPS. Just how did the car maker fare overall, though? We will discuss. And if you like Bloomberg News, check us out on the radio. You can listen on the Bloomberg app, Bloomberg.com, and in the U.S. on SiriusXM. This is Bloomberg. Tesla shares fell in the start of after-hours trading after the company came out with its fourth quarter results. The electric car maker reported earnings per share estimates that fell below Wall Street, EPS that fell below Wall Street. Tesla also announced it would restructure in the first quarter to cut annual costs by $400 million. To discuss in New York, ARK investment analyst Tasha Keeney, and in San Francisco, we've got Bloomberg's Dana Hall, who, of course, covers Tesla for us. Dana, break it down.
Yeah, I mean, so this earnings report was not a huge surprise. Elon Musk had signaled to everybody when he announced layoffs earlier in January that they were expecting a smaller profit in the fourth quarter than in the third quarter, and that's what they delivered today. They missed on EPS, but still have cash, can pay off their debt, and shares have kind of bounced around a little bit after hours, but are fairly flat last I checked.
So, Tasha, I mean, the big question is sustainability. Tesla had, despite a lot of challenges, a record year last year. What are you expecting when it comes to production and deliveries and demand this year?
So for demand, I mean, we've really seen the Model 3 come through in really surprising ways. I mean, it's the top-selling premium sedan in the U.S. For the second two quarters. Again, in the U.S., we saw demand come in really strong. They're just starting deliveries in China and Europe. So I think we could expect, similarly positive, a positive picture there. In terms of production, I think there's actually too much focus on production and delivery figures for a company that's really ramping like Tesla. At ARK Invest, we're long-term investors, so we're looking to the future. We're looking to Tesla as an autonomous mobility as a service company. So if they miss production figures by, a month or a few weeks, that doesn't bother us so much because we're looking to the long term. We think that the Tesla could launch an autonomous service, and that's the most important market opportunity ahead of it.
Well, and Elon Musk himself has focused a lot on production. I mean, he's the one who said that the Model 3 would take Tesla through production hell. That said, we know the company's not going to necessarily keep up the production levels of last year. They've laid off 7% of the workforce, trying to restructure. So, Dana, how will that sort of redistribute workflow?
Yeah, it's interesting. The shareholder letter said that they're now hoping to reach a sort of sustained production rate of 7,000 Model 3s a week by the end of 2019. And, remember, like in August of 2017, Musk said you should have no concerns that we're going to reach 10,000 a week by the end of this year. So they're definitely kind of walking back some of their original production targets. But at the same time, I think they're really trying to manage demand. I mean, this is a company that builds to order. They don't have a lot. They try not to carry a lot of inventory. And with the tax credit cutting down and, these different, trying to just manage, they don't want to build a lot of cars and have them sitting around. So I think it's actually smart what they're trying to do.
Tasha, Tesla's broken ground on that factory in Shanghai. How optimistic are you about Tesla's future in China in the midst of these trade tensions?
We've actually seen a lot of positive activity, particularly in the auto space in China. This past year, we saw the relaxation of the 50-50 joint venture rule, basically allowing Tesla to enter the market without a local partner. We think they still will have some local partners, perhaps for supply, of course. But it's that rule relaxation actually seemed uniquely beneficial to Tesla. We've heard Musk say that he's had good talks with local officials there. He's complimented them on their science prowess, right, as he's trying to roll out autonomous driving. And for us, we think that's the largest market for autonomous driving. So it's really strategic for Tesla, and we're excited to see what goes on there.
We haven't gotten an update on Autopilot in a while, Dana. What are we hoping to hear on the call today, which starts now in about 15 minutes?
Yeah, there wasn't much on Autopilot in the shareholder letter. On the call, I would imagine that people would be asking about it. Like when is Tesla going to first demonstrate this autonomous cross-country drive? In previous calls, we've had the whole Autopilot team on the call. I'm not sure people are expecting that this time. But, there's a sense, I guess, that Tesla has fallen behind competitors like Waymo, Zoox, and Cruise when it comes to sort of getting to market with an offering that consumers will feel comfortable in. And
Tasha, clearly, Tasha, the Model 3 and Tesla is far ahead in terms of electric cars overall. But you do have competitors coming to market. Sales for those will likely be small this first year, but will grow next year. How much does Tesla have to worry about the competition, whether it's Audi, whether it's Porsche?
Sure. Well, first I'd say on an autopilot front, I actually think Tesla's Navigate on Autopilot feature shows that it actually is sort of competing with companies like Waymo. I mean, they're coming from a different approach. They're testing on suburban roads as opposed to Waymo is testing on suburban roads as opposed to Tesla, who started mostly on highways. But that feature in terms of getting on and off the highway is actually a problem that many autonomous teams have had trouble with. I think on the battery front, we've heard that Tesla's going to account for about 50% of global battery production by the end of this year. So when we think about competition, that competition gets to scale, and that takes years. Tesla already has that scale, and more importantly, they have a technology advantage. So, we just heard the North American CEO of Toyota say that Tesla's affecting Prius sales, and they're creating a new category vehicle, a technology-driven car. So that comes in through over-the-air updates, things that competitors just don't have.
Now, Dana, it's obviously been a tough year for Tesla as well. Elon Musk was fined by the SEC. They've brought on independent directors. We don't know how independent they really are, but Larry Ellison has joined the board, and Elon Musk has been fairly quiet. Is there a sense that the governance and the leadership issues have stabilized?
I think that 2018 was such a dramatic year between, the autopilot fatality, the SEC investigation, the go private bid. I mean, Tesla was in the news nonstop, and I think everybody at the company and at the executive level is just like ready to sort of focus on execution and stay out of the limelight if that's possible. So, the shareholder letter today was remarkable to me in that it was a bit conservative just in terms of guidance. There weren't any pie in the sky predictions. We didn't hear anything like, oh, we're going to unveil the Model Y in March. I mean, it was very much sort of like a conservative letter, and it'll be interesting to see what the tenor of the call is today. Probably a little bit more conservative as well.
Well, after a flurry of tweets, Elon hasn't tweeted since that Q4 investor letter dropped. So quiet on the tweet front for the moment. Dana Hall for Bloomberg, ARK Investments, Tasha Keeney, thank you both.
Thank you.
All right, coming up, we continue our earnings coverage with Microsoft. Will slowing cloud demand put its title of world's most valuable company at risk? And we continue to monitor Facebook's earnings call. The company says the opportunity for Instagram e-commerce is healthy, but Facebook has to partner with others and establish a strong payment gateway before that scales up. We're going to continue to follow what Facebook has to say on this call throughout the hour. This is Bloomberg. Microsoft reported revenue for the second quarter in line with Wall Street estimates. The company said revenue increased 12%, with $9 billion coming from its commercial cloud business. This coming after weeks of back and forth with cloud rival Amazon for the title of world's most valuable company. Our Bloomberg Intelligence senior analyst Anurag Rana joins us from New York to discuss. Anurag, what are your big takeaways from this report?
See, one of the things, as last time we talked about it, was in the last quarter, Microsoft grew revenues 18% in constant currency, and we said it's going to be very difficult for them to emulate something like this going forward. This time they grew 13%. Good, very, very decent in our view, but again, as compared to last quarter, slowdown in growth.
But what about these cloud concerns? I mean, why is that happening?
So I don't think that it's, in our view, it's not the cloud numbers that is really driving a couple of percentage points in the stock right now. It's really the PC numbers that were weaker than what we anticipated. And I think there was some news on the tape that there is some chip shortage that led them to, see less than, favorable PC shipments. And we'll hear about it more on the conference call that starts in about 10 minutes.
That said, the cloud is the future for Microsoft,
yes.
And so it is for Amazon. We're waiting for this big, potentially huge government contract to come down for one or the other, or perhaps another company. Do you think that could change the hierarchy here dramatically?
See, as far as cloud is concerned, for both Amazon and Microsoft, I think there is enough for both of them for the next, several years to come. Cloud as a total percentage of, IT spending is still very low. It's, cloud is anyway, give or take about $150, $200 billion of total tech spending, which is about, $1.5 to $2 trillion. So cloud is a very small portion of total tech spending. So as we go for the next decade, there is enough money for both these companies to go bye-bye. But as far as the government contract goes, I think it's going to be very interesting to see which one of them finally gets it, because so far, as you mentioned, Amazon has been the number one player for a while, but we would say that Microsoft is very close behind them.
So the big question is, will Microsoft hang on to that title of world's most valuable company this year?
I mean, that's very difficult to say. That's more a function of market cap. But if you look at the fundamentals of the business, we think Microsoft is well positioned. Microsoft, we think, in a certain way, is better positioned than some of the other companies because it has huge presence both on-premise software as well as public cloud. So it has the best of both worlds in our view.
All right, our Bloomberg Intelligence senior analyst Anurag Rana. Anurag, thank you so much for weighing in. Coming up, Alibaba posted strong third-quarter earnings results as many other Chinese companies fell short. But is it really getting through China's slowing economy unscathed? And we'll continue to monitor Facebook's earnings call. Here's Mark Zuckerberg on the massive changes underway at the social network.
Shall we build services to focus more on preventing harm? We've invested billions of dollars in security, which has affected our profitability. We've taken steps that reduced engagement in WhatsApp to stop misinformation and reduced viral videos in Facebook by more than 50 million hours a day to improve well-being. We've made significant progress, and we're going to continue this work. But we're also going to allocate more of our energy to building new and inspiring ways to help people connect and build.
This is Bloomberg Technology Global Link, where we join Bloomberg Daybreak Australia to bring you the latest in global tech news. I'm Emily Chang at Facebook headquarters in Menlo Park, joined now by Heidi Stroud-Watts in Sydney and Sherry An in New York. Let's take a look at the top global tech stories of the day. Sherry?
Right. Pinterest has selected Goldman Sachs and JP Morgan Chase to lead its IPO. Bloomberg has learned that the company could raise $1.5 billion in a public offering, which could take place in the first half of the year. Pinterest is a visual search site where users post and look for pictures that interest them. Foxconn reportedly is having second thoughts about that $10 billion factory it's building in the U.S. According to Reuters, Apple's main manufacturing partner may scale back or abandon plans to make cutting-edge TV screens at the facility in Wisconsin. That could undermine promises to create 13,000 jobs there. President Trump hailed the project for bringing jobs back to America. Facebook reported revenue that beat Wall Street estimates, showing the largest social media company's advertising business is weathering scrutiny over a series of privacy scandals. Fourth quarter sales were $16.91 billion, and the number of daily users climbed 9% in the period. And those are the top global tech stories today. Emily.
All right. Alibaba shares rose in the session after they reported third quarter results that beat expectations. It is a bright spot for China after at least 20 companies warned that full-year earnings would miss estimates amid a wider slowdown. Joining us now to discuss, Kevin Carter, founder of exchange-traded fund EMQQ, which invests in e-commerce in Asia. So, Kevin, how did Alibaba manage to avoid the macroeconomic catastrophe that's impacted everybody else?
Well, I think catastrophe would be putting it a little strongly. I mean, the macroeconomic picture still looks good. I mean, growth, has been slowing for a decade, and it'll continue to slow. But you're right. There's been a lot of concerns about the consumer side of things, and we've had a number of U.S. companies even disappoint. So I think the reason they did well is the same reason they've done well. I mean, this is a secular story. You've got billions of new consumers in China and elsewhere in the world that are getting a cheap smartphone and getting online for the first time and doing things, lots of different things in an online way.
Kevin, though, even though they did well and they beat expectations, it was still disappointing because that December quarter is meant to be a mammoth one for Alibaba traditionally, right? And yet you have sales are the slowest since 2016. Qualcomm is growing by the least since they broke out those numbers separately about 3 years ago. Is this kind of the peak that we're seeing?
Well, I don't think it's the peak. I mean, they still had, overall revenue growth north of 40%. The cloud business had been growing at 100%, for a while, and is now growing at 80-something%. So, I think a lot of adjectives get used for China and for Alibaba that sort of twist the growth numbers into somehow being disappointing. And perhaps some of them are, from time to time, irrelevant relative to expectations. But these are incredible growth numbers. I mean, 83% for $1 billion line of revenue, top line growth, and 41% overall. I still think for the size of this company, that type of growth is quite strong.
Yeah, very welcomed by investors after we had, about 20 China-related companies issuing profit warnings. How much do you look at the macro situation, the structural slowdown in China, as well as the trade war as being impactful factors for a business like Alibaba?
Well, the trade war itself, if you think about it, it's about agricultural products, soybeans, sorghum, manufactured goods, auto parts, steel. The emerging markets internet story, the Alibaba story, this is about the 85% of the world's consumers doing things as digital natives, and whether it's hailing a ride on their phone or watching a Bollywood movie in their bunk bed at night, those things aren't going to be affected by the trade war. Certainly, if there's slowing in China, if the economic picture gets darker there, perhaps people won't, hail a ride. They'll walk. But for the most part, this sector should be pretty well insulated from the trade war. Although the sentiment certainly has weighed heavily on the stocks.
So let's talk about what won't be insulated from the trade war. Of course, we know that these talks are ongoing, but the U.S. has taken a very aggressive stance toward Huawei, filing formal charges. Are you expecting negative impacts elsewhere?
Well, of all the things, whether the trade war or the general idea that the Chinese consumer is starting to get a little sluggish, it's the Huawei situation that I personally find the most troubling. I mean, this is the company that makes the leading hardware for the cell carriers and certainly for 5G, and I'm troubled by the whole thing. I mean, I think there was some elements of the indictment that came out with the robotic arm, punching away at the phones, and an engineer trying to swipe one in his gym bag. I'm troubled by the story, and I'm troubled by the idea that Huawei is getting boxed out of selling their hardware around the world, because it seems like most of the telecom providers want the hardware. And so that's, of the three things, the Huawei situation is the one that I'm most unsettled by presently.
China and the U.S. markets aside, they've talked about expanding internationally, focusing on Southeast Asia. Are we expecting them to shift further away from that asset-light model, particularly as they expand in Asia?
Well, I think 60 or 60% or more of the world's people are in that circle of the world now. Between China, India, Indonesia, and I think that it's easier for Alibaba and some of the other Chinese companies to transition into those markets. I'm a little more weary about the ability for Alibaba and others to do things in the U.S. and Europe and so forth. In terms of the asset-light model, I mean, I think, one of the things that we're seeing in the Alibaba story, and we talked about this last time I was here, Emily, the digitization of the entire Chinese economy, including, the Hema markets, for example. So I think, to the extent that the company, both Alibaba and Tencent, continue to expand in the online to offline world, those by definition will be more asset-heavy businesses. But I think that relative to most industries, Alibaba will always be an asset-light business model.
All right, Kevin Carter, founder of EMQQ. As always, thank you so much for stopping by. We've got much more ahead. I'll be sitting down with Facebook COO Sheryl Sandberg at 6 p.m. Eastern Time to talk about the earnings report and much, much more. This is Bloomberg. Following Apple's not as bad as people feared earnings report, the stock jumped in Wednesday's session to its highest level in more than a month. And with that surge, the iPhone maker saw its market cap pass Alphabet's and take the third spot behind Amazon and first place Microsoft. So has Apple turned a corner? To discuss, we've got Citigroup Managing Director and Analyst Jim Suva in San Francisco, who currently has a buy rating on Apple. Jim, has Apple turned a corner?
Well, we definitely think the corner it turned so far is resetting expectations. Hasn't turned the corner on great innovation right now, but resetting expectations. The worst is now behind us. And that's why you saw the stock rally today, is the worst is behind us. It was not as bad as feared.
So what about China? That looked pretty disappointing. Revenue down 27%, $5 billion worth of sales gone.
Yeah, that was a big shock. They did pre-announce negative in early January, around January 3rd, and they did cite foreign exchange in China. To give you a few more numbers, China used to represent 20% of sales of Apple. And now we're here sitting today after that big decline at 15% of sales. China is still important, but what we've seen is the more developed countries, such as North America and other places in Europe, show some strength. But what it really comes down to get to your first question about turning the corner, is Apple has really got to innovate and innovate hard. And that's what we're looking forward to in the quarters ahead.
Do you think that innovation will happen?
Well, they are definitely spending the money. If you break down the operating expenses, they're increasing their research and development and decreasing the amount spent on salespeople. Salespeople typically tied to the number of phone sales or their closing of deals. But the increase in R&D, I doubt it's to simply look at their beautiful spaceship headquarters and watch the green trees grow on their Earth-friendly various sites. It's got to be for some new products coming out. And that being said, here's the timeline and what we look forward to, Emily. First, the Worldwide Developer Conference, which they host in June. They'll talk about various things there. And then following that in September, their iPhone launch, where we are expecting 3 new iPhones coming out. We certainly hope it's a lot more than just additional cameras on the phones. But with them spending the amount of R&D they are, you gotta hope it materializes into some more innovation.
That's him. Tim Cook himself has said that people are holding on to their iPhones longer. So that means the better the iPhone is, the longer it lasts, the worse it is for Apple. Of course, they've been talking about transitioning to a services company, but do you see Apple as a services company and not a hardware company in the future?
Emily, 2 very smart questions you just asked. First of all, on the lengthening iPhones. Yes, they are lasting longer. They're waterproof now. The screen quality is better now with Gorilla Glass in them. It makes it so when you drop your phone in the sink or on a sidewalk, it doesn't break as much. That means that people will have their phone longer. Now, ethically, the right thing to do is build the best product for consumers, and that's what Apple's doing. And in essence, it's kind of hurting itself a little bit because people are holding their products longer, but it's the right thing to do. They need to innovate with some new features. Now, regarding your other part of the question, it's very important to note the way that we think about things going forward is that layout of the Worldwide Developer Conference in June, following by the new phone launches in September. Right now, expectations have been reset lower. The company also did underbuy its normal amount of stock buyback. And simply put, the stock is cheap. Trading at what we call 10 times earnings is very cheap for a company of this caliber.
Well, it wasn't long ago that Apple hit that $1 trillion market cap, and now it is in third place. Citigroup's Jim Suva, as always, thank you for stopping by. Meantime, Qualcomm, it's been a busy day. Qualcomm also out with results. The chipmaker gave a sales forecast in line with analyst estimates, signaling the move to next-generation 5G wireless systems is helping to offset declining smartphone demand. Bloomberg's Nico Grant talked to Qualcomm executives earlier. He joins us now from San Francisco. Nico, what did the executives from Qualcomm have to say?
So basically, Qualcomm did much better than expected. And there were two things that investors were looking for. One was, what does it mean that Qualcomm is not getting this revenue from Apple and has these disputes? Are there any updates on those disputes? Qualcomm executives said no, there are not. Basically, what they have said about Apple is still true now. However, they said that they expect that within 2019 there will be some sort of a resolution with Apple on the question of whether to pay these massive amounts of licensing fees. Steve Mollenkopf said that whether it's through a negotiated settlement that they have with Apple outside of court or whether through litigation, there will be some sort of a resolution. And then there was also the question of what would happen to demand for Qualcomm chips based on devices. Now, that's particularly true in China, where there's been an economic slowdown, the slowest economic growth since 2009, meaning that there's been a lot of concern about whether consumers will continue to buy smartphones. Mollenkopf said that so far it looks like the question of the smartphone slowdown in China was a calendar 2018 story, and that he expects that smartphone demand will go up by perhaps 1%, that China will be stable for this year. So it does seem like Qualcomm expects the worst is behind them on that front.
Interesting. Well, that would ironically be good news for Apple and every other smartphone maker. We'll see. Looks like the headlines coming out from the call, they said licensing is doing well in China. That said, Qualcomm has for years now been trying to push this 5G story. We don't know when 5G will truly hit the mainstream. Any updates on when they expect that to add significantly to the bottom line?
Absolutely. So Mollenkopf said that the 5G rollout in terms of devices will start in the first half of 2019. Qualcomm executives also said that they expect with the 20 or so devices that will have 5G will mostly be powered by Qualcomm chips. They're seeing a lot, particularly in China, where there are many smartphone makers that are developing 5G devices. The issue for Qualcomm, though, is that most of its profit comes from licensing. And so even if sales are doing well because of 5G chips, and Qualcomm executives reiterated that it's basically the high-end devices where they're seeing the most strength for 2019, and on the lower end, there's a lot more competition in China and elsewhere. But good news on the licensing front for China, because Qualcomm said that it's been signing new deals with Chinese OEM phone makers, and basically that compliance with those licensing revenue agreements is doing a lot better than some had feared. There was also a particular update on Qualcomm's dispute with Huawei, which is, of course, one of the world's biggest phone makers. Like Apple, Huawei had stopped paying its licensing revenue, but Huawei decided to start again under this new interim agreement that Qualcomm and Huawei have, in which Huawei will pay Qualcomm about $150 million a quarter for the next 3 quarters, up from $100 million, until they come up with some sort of a final solution on how much Huawei should pay for licensing Qualcomm's patents.
Right, it's a huge part of Qualcomm's business that is under threat, not just because of Apple, but also, as you mentioned, because of Huawei. Nico Grant for Bloomberg there. Thanks so much, Nico, for that update. Coming up, we are going to return to Facebook's earnings results. Speaking on the call, CEO Mark Zuckerberg had this to say about encryption. Take a listen.
People really value the privacy that encrypted messaging brings. We've built the most secure global messaging service in the world. As people increasingly share more privately, we're working on making more of our products end-to-end encrypted by default and making more of our products ephemeral so your information doesn't stick around forever. In Instagram, one of the areas I'm most excited about this year is commerce and shopping. There's a lot of natural activity happening here, and this year I expect us to deliver some qualitatively new experiences around that.
Mark Zuckerberg there moments ago on the Facebook earnings call. I want to bring in who else but Bloomberg Tech Sarah Friar to talk about the biggest takeaways. And Sarah, interesting reading the headlines from the call. The big news seems to be that from Dave Wehner, the CFO, that revenue growth is going to slow down this year, in part because of continued investment by the company, spending going to go up 40 to 50%. And in fact, Dave Wehner had to jump in a few times to remind analysts and investors that revenue growth would be slowing down. What's your take?
So Facebook basically came out with really great numbers, better even than people expected for their advertising business. So I think what Wehner's doing there is he's trying to tamp down a little bit of the excitement. Basically, analysts and investors now are thinking that Facebook has weathered all the storm of the criticism, but you look at the rest of 2019 and you have a few factors contributing to challenges for Facebook. You have the slowdown in the main app's growth. Wehner said that they'll stop reporting the Facebook growth numbers and will just report numbers for the overall business. You've got scrutiny from regulators, but so far it is still one of the powerhouses. Facebook and Google are basically the only places that you can buy mobile advertising that has the level of return on investment that advertisers are looking for. So really, the scrutiny hasn't come to hurt their business yet.
Facebook shares spiking after hours, now up 12%, which is potentially a big step towards recovering some of the massive losses they have seen over the last year. You know, one of the interesting numbers that I pulled out was when you look at daily active users in North America, they actually ticked up. DAUs and MAUs ticked up in Europe. Was that a surprise?
I think that was surprising because Facebook had warned us that those markets had gotten to a saturation point, that there wasn't going to be that much more growth there for their main advertisers. But, you know, we have seen that the company is investing in new areas like Messenger and Instagram and WhatsApp, and they may still be able to draw in a lot more attention in those new markets. I think it's very interesting to look at what Zuckerberg says about how the future of the business is going to look. He did talk about merging the back end for Messenger, Instagram, and WhatsApp so that people are able to send messages app to app. And he underscored that this was about giving people a way to send messages that would be end-to-end encrypted. He seems very excited about the idea of messaging that even Facebook can't see. So that'll be really interesting to see how it develops. He said that will be more of a 2020 project, that they're working on it hard this year, but you won't see results until then.
Meantime, there's a cloud that continues to hang over Facebook right now. This Facebook research app that Facebook had been paying users for their data, including teenagers. Apple has said this violates their agreement. They revoked key app development tools for Facebook. So that app is now off iOS, but also it means that Facebook employees can't use some of their internal iOS apps. What update has Facebook given about this?
I don't think that investors recognize how big of a deal this is if you're a Facebook employee. You cannot use any of the beta versions of the apps. They all use beta versions of Instagram, Facebook, Messenger, and WhatsApp. And you can't use any of the internal tools they have for using the transit system or booking conference rooms. They have apps for all of those things. Facebook has told me that they're currently negotiating with Apple to try to come to some sort of agreement over this, but there's really no visibility into whether they'll be able to do that.
Any discussion about regulation and how that would impact the business? Any questions about that from analysts?
A little bit, but mostly they were focused on the new business areas. It's really interesting how little a lot of that scrutiny has impacted the stock price and the company at large. There was one question about whether any of the critical news reports in the past few months have led to user deletions. Facebook CFO Dave Wehner says the numbers basically should speak for themselves, that users still very much like using Facebook.
To that point, Sheryl Sandberg on the call just now being asked about growth in Messenger and WhatsApp. She says they're focused on user growth in Facebook Messenger, still not ads yet. Same for WhatsApp. It's very, very early days, so a similar refrain there. But the bottom line is big numbers, big beat from Facebook despite all of these controversies. Bloomberg Tech's Sarah Frier, as always, thanks for keeping us honest. And thank you all for watching this edition of Bloomberg Technology. In the next hour, I will be sitting down with Facebook COO Sheryl Sandberg to talk about the latest results and some very important existential questions as well. That's coming up. This is Bloomberg.